Hi, everyone, and welcome to this episode of Money Moves. First, we're going to talk about the debt ceiling. Then we'll go over each of my investing accounts and how they fit into my portfolio. And then we'll finish up with my monthly tracker. If you like investing and making money, definitely like and subscribe. I make videos like this just about every month, so make sure you hit the bell so you don't miss out on any future episodes. Of course, I do my daily stock analysis as well, so you wouldn't want to miss out on those either. Welcome to the Portfolio Bulletin. Let's get started. It seems like nobody's really talking about this anymore. We talked about it as soon as it started happening, and then it really hasn't been on the forefront of anybody's mind here, but the federal government has hit its borrowing limit. They have not raised the debt ceiling. It doesn't seem like they've come to any serious considerations or agreements to raise the debt ceiling or cut spending or whatever it is that they're going to do. But last time this happened in 2011, we got downgraded on our sovereign debt rating, which leads the government to pay more money and interest and actually be less capable of borrowing. And all of this affects the economy negatively. There's uncertainty in the markets on what exactly is going to happen, and uncertainty usually leads to lower prices. They mention a dysfunctional Congress paired with an arbitrary borrowing limit isn't exactly a recipe for calm markets, and investors are starting to take it seriously. They mention that U.S. government credit default swaps have spiked, narrowly exceeding their peak from 2011. And it's interesting that they're mentioning this here because this could be one of the reasons that the 2-year and the shorter term treasury bills are staying at higher interest rates, because there is some issue here with the government deciding whether they're going to raise the debt limit. It seems very likely that they're going to. The question is how much, and are they going to cut spending? Are they going to reach a consensus? And really, we haven't gotten any information that points to the fact that they are going to do that and how exactly it's going to happen. And to finish up here, they say there's not much for investors to do except for pray for the elected officials and hope that they come to an agreement before it's too late. Moving over to my investments, starting off with Groundfloor, you can see I have $10,785 here in this investment. I continue to reinvest all the money that comes in from these investments into new notes. You can see my expected earnings here is $1,012. My net earnings to date is $830, and that was across $14,000 worth of repayments. And all of this money has been reinvested into new notes. You can see I have $10,780 currently invested with an expected return of 11.1%. And then scrolling down here, you can see by note, I'm mostly invested in C notes. That's been the case pretty much throughout the time that I have invested with Groundfloor, especially now that they've actually raised their rates a little bit. Most B notes are in the 10% range. C notes are 11 and 12%. D notes 13, 14%. And really, I've lost very little money. There were a couple of notes that defaulted, and I got about 70% of my money back on those defaults. And those losses were easily covered by the amount of gains that I had across the rest of my portfolio. Another thing I want to highlight here is just how many notes I have versus how much money I have. You can see I have hundreds of notes, 265 just in C notes, and then between D and B notes, more than another 100. So my almost $11,000 is spread out across about 370 loans. So lots of diversification just to keep protected across the few notes that are going to default every once in a while. Moving over to worthy bonds, you can see $5,279 here. Interest, $419. 501 bonds here. You can see worthy property, one note. The rest of it is in Worthy Pure Capital 1, which was the original offering here. All of these are currently sold out. You can buy Worthy Property bonds, though. And then moving back up here, I want to highlight they did increase their interest rate to 5.5%. Before it was 5%, which works out to be a 5.65% APY if you keep your money here in Worthy. So far, I've had no losses, but I have heard some people had issues getting money out. I haven't had any of those issues, and everything seems to be on track here, and they're actually paying increased interest now, which is good to see. Moving over to Fundrise, you can see it looks completely different. They've changed the layout and they've added a few things here, so let's talk about it. You can see total account value, almost $65,000. You can go to net returns. You can see I've made almost $10,000 all time. I started investing with just a little bit of money in Q1 of 2019, so I've been invested with them for more than 4 years here, so decent amount of money in that time. And then you can go to portfolio and you can see just under $50,000 is in their traditional real estate investments, and then growth equity, Fundrise IPO, that's equity in the company, and then their growth tech, that's their venture capital fund. So I'm spread out across a few things here with Fundrise. I do really like this company, and returns have been good. You can see there was a little bit of losses in Q4 of 2022. You can see that big depreciation step down, $2,630, but net dividends were still very strong. Going over to portfolio here, you can see basically the same information. Big depreciation step down in Q4 of 22, but big dividend payment that quarter, much larger than normal. Normally, they only pay out a few $100, about $150 per quarter. And that quarter, they decided to pay a much bigger net dividend, which helped offset that depreciation. Otherwise, here you can see basically the same numbers. And I continue to add to this account $650 every single month. And then looking at new things here, you can see they just launched Fundrise Pro. I did opt in just so I could cover it. I'll probably do a video just on this to see what all the differences are once I've looked through it a little bit more. But understand that Fundrise Pro is now a thing. Doesn't cost anything, but it just gives you a little bit more hands-on ability in terms of what REITs you're purchasing versus Fundrise just allocating your money for you. Moving over to my high yield savings account, you can see just over $19,000 here. Looking at the last month, up about 0.5%, not too bad. Up over the last quarter, 1.58%, almost $300 in gains. And you can see how much of that is dividends. Almost half of that gain is dividends, which is nice to see. I might actually draw this down a little bit and move some of this money over to my trading accounts. The main reason that I had this much money over here was because M1 offers a line of credit, which is M1 borrow against your investments here. But as the Fed rates have gone up, they can't offer nearly as good of rates on their borrowing, and it becomes much less appealing to do so. We'll see how that plays out, but right now, that's what I have in here. You can see large portion allocated to real estate, trying to get those dividends in this account. Primarily, it's a dividend account. You can see Vanguard Dividend Appreciation, Vanguard Value ETF. I do own a little bit of growth here with VOOG, which is the S&P Growth ETF, which is very similar to the NASDAQ. And then I own some individual stocks down here that I've picked. And you can see Vanguard Growth ETF doing the best here over the last quarter, up almost 10%. It's also worth noting that I have been buying bonds in here, midterm bonds, as well as bank balance sheet bonds. I think bonds are starting to be a little bit better value. And if the Fed does start to cut rates, then bonds should go up in value. And now might be the best time to start buying those a little bit. Moving over to my TSP account, you can see $88,000. This is my retirement account. I have about $5,500 here in government bonds. Like I said, I am continuing to buy bonds. I think they're a little bit undervalued on the longer term. The F fund here is corporate bonds, buying that as well. And then stocks, this is the C fund, that's the S&P 500, buying a little bit of that. And then the S fund, this is the total stock market fund, buying a little bit of that as well. You can see largest allocation to the S&P 500, followed by the total stock market fund. But in terms of future contributions, you can see buying 30% bonds, much higher than the current percentage at 5%, and then government bonds, 10%, much higher than the 6% currently allocated. And then between these 30% and 30% even, so a little bit less than the current 51% for S&Ps, and a little bit less than the total stock market fund at 30% versus 38%. And lastly, here we have my trading accounts, just over 94,000. I added some money to this over the weekend, but otherwise this is not performing nearly as well as I wanted it to early this year. And considering how well we did last year with the down move, still did fairly well. But over the last week, I did a little bit better. And I think I'm going to continue to stick with the way that I've been trading here recently compared to what I was doing earlier in the year. Otherwise, all long positions right now. Market seems to be going up, and we'll see how long. And until it doesn't, we'll stay long in the markets. Definitely check out my video tomorrow if you want to know more about my thoughts on the market in the short to medium term and my positions going into Monday. Moving over to my monthly tracker, I did miss March, which is unfortunate, but looking at February to April here, you can see stocks haven't really gone up that much. February was pretty much a peak, and even with the added money, you can see my stock accounts are down 2.2%. Similar for trading, down just over 3%. Not great, definitely should be performing better there. Otherwise, continuing to add to my bond portfolios, you can see up almost 5%. And then real estate doing fine here at 1.1%. Overall, 1.1% gain from February to April, which which is not too bad. And this was actually another record here. I put my highest invested capital number here just because pretty much throughout 2022, the peak was at the beginning of the year, and it took all the way until the beginning of this year to retake those levels. And now it's pretty much making a new high every single month because the markets are generally flat or up a little bit. Let me know down in the comment section what you think of my investing portfolio or any of my individual accounts. If you like any of these investing platforms, definitely use the links in the description to open your accounts, as it does support the channel and get you a little bit of free money. Definitely like and subscribe if you got any value out of this video. And like I said, make sure you check out the Sunday video if you're interested in short-term trading or my medium-term economic outlook. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and investing, and have a great day.